I'm Blake Hylands. I'm the CEO of Lithium Ionic. It's a hard rock asset in the Minas Gerais state of Brazil.
Blake, it's the first time we might have spoken, so appreciate you coming on the show and talking lithium. It seems to be talk of the town at the moment, that's for sure. Can you just maybe tell us a little bit about you? What's your background? Where have you come from?
Yeah, thank you very much for having me. And absolutely. So I'm a geologist by background. Spend most of my time in precious metals, base metals, a little bit in the ag space as well, and a bit in iron ore when that was kind of booming in the 2013 kind of range. But then spent the last 4 or 5 years actually founding a gold company called Troilus Gold in northern Quebec. Maybe some of your listeners know it. I think Justin's regular on this platform, but was part of that team that ultimately drilled that to where it is now, and recently resigned as the president of that to take on this role as CEO of Lithium Ionic.
So how long have you been with Lithium Ionic?
I started with Lithium Ionic as it was going public in May of 2022. So I started probably April-ish of 2022 and took it public.
Okay, and so I'm always interested in the kind of business plans and strategies that teams employ, especially in battery metals. So you're brought on to do what? What was the objective then, and how's that changed?
Yeah, I mean, look, I think we have such a strong technical team on the ground. I think it helps myself having a bit of a technical background to be able to work really well with them from distance. Our company is really based in Belo Horizonte, which is in the Minas Gerais state in Brazil. That's really where the company is. That's the heartbeat of the company. Myself, our CFO, and our team is here in Toronto, and really that's the marketing, the fundraising, getting out there, telling the story, and the capital markets performance aspect of it. So really brought on to focus on that. But I think having that background helps me kind of relay what they're doing on the ground to the market as well as I possibly can.
Right. Okay. So it went public not so long ago, but and you've also recently just put out 2-3 weeks ago put out a PEA. So was it sort of advanced in the private capacity initially, because you've kind of rushed through to economic study pretty darn quick. What did you have back then when you went public?
Nothing. We had a few trenches, maybe some soil samples that were interesting, and I think that's the beauty of the hard rock space, is how quickly these things can move, and that also speaks to Minas Gerais state and to our team. But I think when you look at drilling off a hard rock pegmatite project, 20 to 30,000 meters might give you a 20 million ton asset. And that's where the economics of what we put out was really based on. We used a 20-year mine life on 26 million tons. That's 20 years at 1.3 million tons run of mine. It ends up being a $1.6 billion post-tax US NPV and 121% post-tax IRR. And even at a discounted spodumene price that we used, $18.50, you're still only a 14-month payback. But the projects work because, and the economics on them work because, the footprint of them is small compared to a big iron ore project or a big gold project or something like that. The capital to build them is small compared to other assets, and defining them is quicker because I'll use Troilus. Troilus is a 240 million ton or more deposit, right? This is 20 million tons, 26 million tons gets you a 20-year mine life on a project like that with great margins and great economics.
Right. And so if I look at the lithium market at the moment, obviously went on a tear up till I don't know, October last year, let's say, and then it's come off dramatically in terms of the pricing. It's had an impact on equities, including your own, in a very difficult market. It must be so for equities more broadly, but you've got to take a view on these things. You've got to take a view on where lithium's going. Is the EV revolution going to be part do a lot of the heavy lifting for you? Is it going to slow down? And what does that do in terms of how you drive your own projects? You've raised $30 million or $28 million or so in August. So what's the plan? How do you play the market?
Yeah, I mean, it's a big, broad question. I wish I had a crystal ball on all of it, but I think what we have seen is lithium price pull back a little bit. What we were even saying last year, if you go back to interviews that I was doing then, or people I was meeting then, our CFO, some of our team, we kept saying that $8,000, $9,000 spodumene price, and really the inflated lithium price was probably not actually healthy for the market, and for institutional investors and strategic investors, I think it actually made it very difficult to invest in that space. It was an interesting run for a lot of early investors and retail space that jumped in and kind of drove that market. But as China has caught up a little bit with supply for their conversion facilities, their battery facilities, prices coming back. Auction pricing reduces. However, we know that's a blip in time, right? That the demand curve is still moving upwards. That supply will not keep up with it, especially as an EV movement, and not just EV, but every green initiative needs storage. It needs batteries. It needs lithium, and so that movement keeps going forward. The green initiative moves forward globally. People want to see that kind of future that's healthier than the one we have now, and lithium is at the fundamental, elemental kind of core of that. And so I think we've pulled back to a price that it's actually extremely healthy for projects like ours that have excellent margins. It's investable from an institutional perspective. It's investable from a strategic perspective. The business is starting to build out for what the supply chain is going to look like, and at the same time, there is still going to be a gap that needs to be filled. And so the demand for this material is going to be extremely high as we go into late 24, 25, 26, when projects like this are scheduled to come online. So we're pushing as hard as we can with the capital you talked about to be able to get a project online in 2025 into 2026, which I think is going to be a very, very frothy time for lithium.
It's going to be frothy for those who can get there. And I think this kind of first mover advantage is going to be critical. So what can we expect to see from you? You've kind of, let's say, raised through, explain why through to PEA, some quite good numbers in there. 121% IR is not too shabby on any level. But are you going to be kind of racing through to a final investment decision in terms of just doing just one more set of economic studies, two more sets of economics, and again that time frame suggests that you're going to maybe skip a phase or two?
It's funny. The first time I saw economics on any of these projects, Sigma was one of the first ones I saw, and I almost fainted. Right, I came from the gold space. I couldn't believe you're paying this thing back in like hours. Any gold project would murder for them. So it is amazing to see what they can be. Our approach has very much been about it becoming a supply chain story. We put out drill results that are high grade on a regular basis. We're going to continue to explore and grow our resources. We know we can. We're in one of the most prolific hard rock belts in the world, and we know that resource is going to grow. But our focus has really actually been that first mover to get into the cycle now, to get this project into production as fast as humanly possible. We think it's going to be a massive differentiator in this market to be a project that actually comes online in 25, 26. And we have the state, kind of a tier one state to permit in. We have projects that can move quickly enough to do it. We have a team that knows how to permit. And I think that in that way, there are these projected projects that are coming online 25, 26 that are supposed to be flooding the market with material, and they won't. I think we're going to be standing alone on the top of the hill, ready for that cycle and that demand curve. So, our goal this year in particular has been to push a project through as quickly as possible to produce. It could have been to grow a resource as quickly as we wanted, and maybe that pushes your market cap up. But we know we're going to be able to fill that in, show more growth, more production scale, and take it from 200,000 tons or more per annum that we're looking at doing now to 300, 400, 500,000 tons per annum. But that'll be something we can phase in, and we can do it as we go. The key now is be alone at the top of that hill.
Interesting, very, very, very interesting, because it's a very sort of anti-Canadian of you. Usually they like to sort of drilling until there is no more to be found. But this is more an Australian model in the sense that you're saying, right, we've got enough as it is. If there's a lot working in our favor, the economics suggest early economics suggest that is the case in terms of not just mining jurisdiction, Minas Gerais in Brazil, but close to the ports, close to the coast, and hopefully those margins, don't get eroded away by inflationary pressures. But if this first mover advantage thing is, you are going to have to, if you are to stand alone, if you are to, find buyers for your concentrate, if you want to find buyers for the company, you're going to kind of need to prove out technically because lithium is a very technical metal. You're going to need to, maybe enhance the team somewhat Do you feel, or because you are so far explorers and now moving into the development phase, so but to kind of prove that technical ability, you're gonna have to maybe staff up a bit. Is that the case?
Yeah. Well, we're in trouble if I'm building it. So I think, for us, we're looking for that right person right now. We have a couple of names that we're narrowing down on that could be the mine builder, the project manager, and ultimately help us get through the construction phase of this. And if we do it right, that will help us keep it on track and on cost, right? Which we've seen a lot of success around us in doing that. I think we have a lot of advantages in this and where the risk profile becomes lower in having access by paved roads, hydroelectric power, a community of 40,000 people right next door, ports, like you said, accessible by road. We're accessible by 8 million people, or 5 million people in the town of Bellow by road. I mean, we have an airport right in the community. I think that we have so many advantages there, but also we have a 30-year producer to the north of us, a small private producer in CBL. We know how these rocks are going to behave when they actually get to the mill. We know how they're going to behave when they're being converted into carbonate, hydroxide, all those types of things. We also know how quickly and the hiccups and what to see when a plant is being built, because we just watched Sigma right next door do it. And they went from a $150 million company to a $5 billion company, building a project on time, on budget. I always point to what an amazing job I think they're doing. And they lay out really nice blueprints for us that we can kind of follow and step in behind. So we have a lot going for us in this belt, being not necessarily the first one through the door, but the next one through the door.
Right. So if you do, we're going to bring Sigma up. Obviously, that is like perfect case study for you. They've done that without. I mean, what help did they have from outside? Because normally when we were sort of looking at brine projects in Chile and Argentina, you're looking at the Chinese know-how. Here with hard rock, the Australians prove that it's simple. Sigma's proved that it's relatively simple. What are the learnings for you, and what does that do for you?
You can learn from mistakes. In this case, I think we learned from a lot of what they did right. And I think that they brought on really good people. I mean, Brian Talbot did a great job for them when they brought him in. They had to take a lot of expertise and knowledge from the Aussie market. I think we're still going to have to look at doing that. I mean, I think in that way, that's going to help us with getting a plant design and project design that we know works. But I think we're also learning, from what's going on with them in their early stage of production. We're going to see where, things are good and things are bad, and where they're getting pushback, where they're not, how quickly they're able to bring material online. I think we're going to learn all those things. And I'm not saying those in a negative way. Those are normal startups for any project. I think those are great things that we can take away from it. But we'll see. We're going to have our own hiccups along the way as well, but it really helps having somebody start up beside us.
Right. And when you say, I'm coming back to this person move for advantage, because I think it's important for investors to understand the significance and importance of this in a market which just, I would go in 2017, people saying, don't worry about it, SQM and it's got this covered. They'll just ramp up and we've got all the lithium in the world we need. Now, we've seen a lot of North American lithium wannabes spring up. We've seen a lot of gold companies, nickel companies change their name to include lithium. It's an exciting future for sure, but getting over the line is the important bit. For you, are you serious about building a team who can build this thing, or is that just a kind of the competitive tension that you need to be able to maybe attract the Sigma, the SQM, the whoever down the road to come buy this off of you? I mean, so again, how do you play that game?
Yeah, I think it's for us. It's the right approach is we have a project that's highly economic, and why wouldn't we try to push that forward and get that up and running? I think to really play the game, we would have gone the other way, and like you said, just keep drilling, put out a bigger number, put out another resource, put out another resource, put out another resource. And that's fine. That's great. And I think that approach will work for some people. But I do think what we give up maybe now in marketable advantage, we're going to pick up on the other side as being really the only company standing there doing this. And I look around the world and there are some fantastic projects, but they are going to be tied up in permitting for a very long time. They need to figure out how they're going to get their infrastructure up and running. The cost of them will be expensive to start. And ultimately, to feed this market, they're going to need to come online. But they won't come online at the same time as us. We're going to move faster than them. And that's really, I think, a massive advantage for us as we look forward. And, we have never come to work thinking, okay, let's attract SQM to come buy us tomorrow or anything like that. We've just said, we've drilled this, it's economic, let's move, let's get up and running. And I think that's the right approach.
Right. There's your model. Love it. I guess let's talk about the money then, because if you have said, right, we don't need to kind of keep drilling this thing out, we don't need to therefore spend money. The expensive money is the drilling, right? So in terms of what is important or priority for you, what does that look like? What can we expect to hear from you going forward? And then what's the significance of those things?
Yeah, I think it's important to note we're not going to stop, right? We have the capital to do what we need to do. We have the capital to go right through our feasibility study. And at the same time, we can be growing and advancing our resources in Itinga and Salinas. And we know that some of these high-grade targets that we have can result in big resource growth coming in behind this kind of getting into production scenario. So kind of like we talked about off the hop, it doesn't take a lot of drilling or a lot of cost to define something worth a lot. And that's one of the beauties of these deposits, is that you can get on top of them, maybe 10, 15, 20,000 meters of drilling can get you something worth, billions on your NPV. So for us, whether it's the PEA that we have out now or whatever the feasibility is going to look like in Q1, that's a moment in time. It's one part of the story. And we want to show that, okay, here's 200,000+ tons of concentrate production, but wait, here's how we go to the next 200,000 tons on top of that. We go to 300, 400, 500,000 tons. And those kind of scale opportunities, I think, continue to build huge value for the company, for our shareholders, and ultimately close the gap between a valuation that you'd see from a Sigma or a Liontown, billions and billions of dollars. And we start to close that value gap by ultimately getting towards production, de-risking the project, but also having a next phase and phase after that shows, scale opportunity.
Right. But you said it a couple of times now, that's a moment in time. It's, that's a picture taken in a moment in time. Sigma, obviously, they were ahead of you in terms of timing and through the phasing that they've been through. So yes, there are things to learn from them, but the market's slightly different. So I guess what I'm asking about how you spend the money and how you're prioritizing it, because the market will value you on different sets of criteria from what may be perceived as valuable for the company to be able to present itself as. Do you know what I mean? So it may be a case of you're being compared to Sigma, so therefore it doesn't matter what you do. There'll be that crowd who will go, well, it's similar enough, that'll do. We'll value our expectations are you're a $6 billion company next week. And there are going to be industry players who say, well, actually, super high grade. They keep finding super high grade. Boring super high grade.
Darn.
Darn. I don't know how you keep doing it. But it's of a scale which is interesting, but we need to see double that. So you got to play to that audience. Or there's stuff that you say, well, we know what we're going to do. We are going to build this thing out. So it's important for that. Scale doesn't matter in that sense. It's really about how do we get deliver this first mover advantage. I get into production, so it creates a barrier for others coming behind us. So do you know what I mean? There's a lot of moving parts on the table there, and board meetings. I'm sure you're discussing all of the above. So that's why I want to truly understand how you're prioritizing that spend.
Oh, for sure. And we have to be conscious of the market we're in right now too. I mean, we want to be, we have to be thinking about. It's great, like you said. You put out high grade news, and nobody seems to care in this market. 6 months ago, it was great. But at the same time, we can be maybe scaled down a little from where we were, 13 rigs down to 4 or 5 rigs, and still be accomplishing what we want to accomplish. I think that when I keep pointing to it as a moment in time, because I think what typically happens on a project like this is that you put out a PEA or you move towards a feasibility study, and someone goes, okay, they're done. This is what it's going to look like. Let's see what they're like when they get into production. Right? I think when I look at this project, I look at it a little bit differently. I look at our story as a supply chain story, as opposed to, an exploration and engineering story, and sort of waiting for mining to happen. What we're doing is trying to create a project that fills a gap, that fills a void, and it is a real supply demand gap that we are looking to fill in. And by moving first, you start to fill that in, but you want to show that you have scale and opportunity to continue to grow, because that's how you feed a starving supply chain. The material in the lithium space that was going to come online to help fill that gap did. Now there's nothing left, right? Now the new projects have to come online, and that's where I think we set ourselves apart from most. But I don't want anybody looking at this project to say it's a 200,000 ton concentrate producer with a 1.6 billion. That's great. Those are great numbers. But it's just a moment in time. It's a starting point for where we think we're going to go next and what we're going to grow to next. And the demand will be there. There will be massive demand for that, and that will just create a huge value for us as a company as we continue to grow.
Okay. No, I buy that. I buy that. I mean, so you talked about looking for people who can help you build this thing out. You're also going to need to bring on people who actually understand the market, because the market seems to be evolving into lots of different bifurcated markets for all the different metals, all the different sort of EV metals, in the sense that China is trying to, retain its own graphite output. They did the same with rare earths a few years ago. The copper inventory seem to ebb and flow, as does nickel. And you've kind of got critical mineral lists, being taken seriously for a change. So you're in Brazil. Obviously, I guess closest market to you would, apart from South America, would be the US. And it's a case of trying to understand how you sell into the markets, because they may look slightly different 2 or 3 years out. Are you aware? I mean, you're obviously conscious of that, but again, are you searching with the kind of people where you can get advice on how to position yourself on the sales side of things?
Of course. I mean, we're actively adding to our team, but also work with very good people around us. And I think that what you're pointing out is truly a holy war, right? It's a Europe, North America, China holy war. Who's going to control this revolution, this change in how the battery space and these critical materials are processed? And that's not something that I'm not a pontificator. Like, it's written on. I mean, China's talked about it since 2015 or earlier. That's why they have conversion plants. That's why they have these battery plants. They fully understood that this was where the industrial economy was going to go. And so when you look at the U.S. and often we do, because I think a U.S. supply chain model is a great one. I mean, it is closer. It could be an excellent trading partner. It feeds into a growing market. They treat it as a matter of national defense, right? It's not just a question of, we want to have cool looking cars. It's that they want to control the industrial economy. So our conversations with different groups are global, and we're a global company. But certainly, to your point, over the coming years here, it may not be only China that's really converting these products. There are going to be new facilities that can work and feed a different market, and in that way, pricing will change, and how these things are controlled and manipulated will change as well. And I think we have to be top of the group looking at that, given the pace we're moving at. We have to understand who's going to take our product, who we want to give our product to, and try to pick our winners as we move forward. So yeah, it is an ever evolving story of who is really going to do what with this material, where is it going to go, and what market is it going to feed. And we have to constantly be evaluating and reevaluating how we fit into that market. So it's a great question, but I think it is going to continue to evolve as we move forward.
Yeah, it's truly fascinating, especially for you're just coming out of exploration stage, and yet you're having to consider these things, which like say 5 years ago, even 3 years ago, forget it. You just metal traders would buy up inventory, and off you go, and that's where battery manufacturers, OEMs would get their inventory too. Now you are having to consider that because it'll affect where you get your money from, the cost of that money, and and a bunch of other implications on the geopolitical front, which we won't get into today. Well, look, that's a really good overview. I mean, so what would you say? Well, just one final one, okay? What would you say to your shareholders, having seen that your stock's kind of come off a bit since you raised that money in August? Moment in time.
A moment in time. Be patient. I think we can do better. We're going to do better. And every day we wake up to do better. But I think from a technical perspective, we're hitting, and we're moving forward. Listen, I know that every CEO and every GL just says from a technical perspective, yeah, big technical wins, right? And shareholders go, great, but I'm losing money. I'm a big shareholder. Our teams are big shareholders. We are in this for the long haul. We see a path forward that makes sense. I think there's a little bit of pain in the market now, but projects like this, world-class jurisdictions, a path forward, growth potential, they're going to stand out as this thing flattens out and stabilizes a little bit. And as we go into, the next few months, we're going to, I think this is a home run. And that value gap is one that is right out in front of us. We're looking to close it. I'm talking about the Liontowns, the Sigmas, whatever you want. These are massive, massive wins that for people that want to enter now, or the people that have stuck with us, they're gonna see that value, and we're just gonna keep working on de-risking this. So.